This is the second video for Accounting 283 on SEC documents. We're going to provide an overview of what is in a 10Q, an 8K, and a Def 14A or proxy statement. So if we went back to the list of SEC documents that was mentioned in the first video, a 10Q would be a quarterly report that a public company issues, right? So think of Q as abbreviation for quarterly. Shown on the outline are the types of information you should be aware of that would be most useful to us. And compared to the 10K, you can see that this is much shorter. So I'm back on the SEC website. I'm going to enter 10Q into the search box. And if you look here, you'll see that Yahoo, right, on August 7th issued its quarterly report for the quarter ended June 30th, 2015. And if you look here, this would be the quarterly report for the quarter ended March 31, 2015. Notice that there's kind of a break in the numbering. This one that I've highlighted is for the third quarter of 2014, September 30th, right? So this would be considered the third quarter of the year. This would be considered the first quarter of 2015. This would be considered the second quarter of 2015. There is no 10Q report issued for the fourth quarter of the year. That's because it's year end and the more lengthy annual report or 10K is issued. So just like before, I can go to the 10Q report. Tells us who they are, where they're located, right? Those types of things. And then it has a table of contents. So the first item, right, is financial statements. Notice the word condensed is used, so the balance sheet and the income statement aren't as detailed. And the second thing I'd like to point out is that they're unaudited. In the annual report, one of the links in the financial statement section went to the auditor's report. So we could get the auditor's opinion about whether or not the financial statements present fairly. There is no requirement for the quarterly reports to be audited. And so while we have little doubt that somebody's cooking the books, the idea is that it would be too costly to have a audit done every 3 months, and so the requirement is that it's done annually. There is a procedure called a review that the independent auditor does every 3 months before these quarterly statements are issued. It's much limited in scope. It doesn't go through as much detail, and you'll learn more about that when you get to your auditing class. So here's condensed financial information. We'll just take a look at one of the statements, and they don't look too much different from what you're used to seeing, right? Assets, liabilities, equity. But again, notice that it's listed as unaudited, and It shows the past year end, and then June 30th would be the date of these financial statements. The second area I'd like to point out is the management discussion and analysis. And recall from the first lecture that 7 key areas were discussed. If we return to this management discussion and analysis section, there is also a list of 7 key areas that are discussed. So once again, right, we learned quite a bit about the company by getting management to tell us what is going on. So we're not forced to just rely to look at numbers. Management gives us some insights as to why revenue might be increasing or decreasing. One thing I was kind of curious about was why they were disclosing 2 revenue numbers, right? Revenue and revenue ex-TAC. So I'll be honest with you, I Googled it, and I found out that the difference between these numbers, right, if you look at the first column here, it's 1,084, 1,040. That $44 million difference is a fee that Yahoo paid to other internet-based companies to drive traffic to Yahoo. So the more a search engine or web service provider like Yahoo pays in TAC fees, the greater the concern is, because they're not able to generate revenue on their own. They're forced to rely on third parties to send internet users to their website. So it's, that's why we have that background section, right, about the company, to understand what they do, and then use that understanding to interpret the financial statements. Our third area that we're going to look at is legal proceedings. And when I go to the legal proceedings section, again, it's a discussion of basically the same items that we saw in the annual report. The reason they're discussed here is that these lawsuits have not been settled, and there's a degree of uncertainty as to whether or not Yahoo may have to pay some type of fine or penalty. So those fines and penalties haven't yet been recorded in the financial statements because there's been no decision. So therefore, at least make the investors aware of what's going on, and they can decide how big a deal it is. And then last thing I'm going to return to is risk factors. Right? They talk about we face significant competition for users. We generate the majority of our revenue from search and display advertising. The reduction in spending by or loss of current or potential advertisers could cause our revenue and operating results to decline. They talk about not being able to manage operating expenses. Okay. You can see here I counted them up, 34 risks. That's about the same number that we saw in the annual report. So once again, if you're going to understand the company, you need to understand what kind of potential problems they would encounter. Our third item is an 8K, and I copied the definition from that list of forms, and it says the 8K has to be filed with the SEC Upon the occurrence of any one or more of the events specified in the items in sections 1 through 6 and 9 of this form, right? So those sections deal with different types of issues, and the SEC has decided that these issues are very important and investors need to be aware of them. So when an event occurs, the 8K has to be filed within a couple days. So we're going to just go back to the SEC's website. I'll search for 8Ks. I actually think this list is kind of short compared to some other companies. Section 5 deals with corporate governance and management. So here's an 8K that was filed related to that Section 5. When you click on it, it takes you to the document, and it tells us that the global controller and chief accounting officer has notified the company that he will leave the company on September 11th, 2015. So the retirement or departure of a high-level individual doesn't really get reflected in the financial statements, but given that person's important position within the company, it's important that investors know about that. So that's kind of an idea of what happens with an 8K, right? There's another one down here, 507. We take a look at that. And this is talking about the annual meeting. And at the annual meeting of stockholders, they have the opportunity to vote for certain items. We'll talk about that in the next part of the lecture. So what the 8K report is doing is letting everybody know what was the result of those votes. So people who were nominated to be directors were elected. They voted in favor of the executive compensation plan. They voted in favor of keeping PricewaterhouseCoopers as the independent auditor. And then if you're the shareholder of a company, you have the opportunity to ask that a issue be voted on by all the shareholders. Numbers 4 and 5 here were brought by shareholders, and as you look in the middle of the screen, most of the voters went against those shareholder requests. So that's what happens in an 8K. Now, since shareholders are entitled to vote, they need to be informed about what's going on. And so that's the purpose of a proxy statement. And what we're going to do, there's maybe 20 or 30 different items that could be disclosed in a proxy statement. We're certainly not going to look at all of those. But, you know, the most common ones, I guess, would be who are the directors of the company? Stockholders get to elect them, right? Directors are running the company on behalf of the stockholders. Talks about compensation. If you're the owner of a company, what are you paying the top people to run the company? And then there's some information about the independent public accountants. And since a lot of you may someday think about a career in public accounting, it's good to know what you can find out there. So I got one more tab. I'm going to do the search, and it brings up the proxy statements. And again, if you look at the list, right, 2015, 2014, 2013, 2012, usually a proxy statement is issued once a year. There's a shareholders meeting once a year. The proxy statement tells us where that meeting is at and gives information to the shareholders so they can be informed voters. So this meeting, right, was on June 24th, 2015 at the Santa Clara Marriott Hotel. Can be anywhere. Could even be in the office of the company. The first item, right, is asking shareholders to vote for directors. So we saw the results a few minutes ago. Here's what was provided to the stockholders prior to making the vote. Who has been nominated? There's a committee on the board of directors that makes the nominations. And then we have some background information about these people, right? So that gives stockholders information about who to vote for. We want to talk about compensation of directors and executive officers. And so there's a advisory vote to see whether or not stockholders agree with the compensation plan. And if we scroll down a little bit, there's some information about what is in that compensation plan. And I just want to scroll down to the part that shows you how the CEO is compensated. I think in one of our searches last week, right, we might have come across who the executive officers of Yahoo are, and it said that her salary was $1 million. Well, notice that the $1 million salary is just a base. There is a cash incentive. Kind of think of that as a bonus, right? If certain targets are made, you can get a bonus. That would be 13% of her compensation. And then 80% of the CEO's compensation is incentive-based. One part of it is based on time, right? As you stay with the company, you will perhaps acquire more shares of stock within the company. And as the company does well, right, those shares of stock you acquired become worth more. And then the other part of the compensation is based on incentive, right? So they not only want the company to perform well in the short term, right? That's what this bonus is for. They also want the company to perform well in the long term, so there are bonuses set up for that based on long-term goals. Then the last thing in the proxy statement deals with the independent accountants. And so one item that we can look at is whether or not the stockholders want to approve PricewaterhouseCoopers as being the independent accounting firm for the company. So that's basically a yes/no vote. Then the last thing that I think is kind of interesting is the fees paid to the independent public accounting firm. So when we go down to that area, we can see that in 2014, Yahoo paid $5.1 million for the audit. In the previous year, they paid $7.4 million. So that's a lot of money, right, to have an audit done. But then they're a multi-billion-dollar global company, so it takes a lot of work to figure out whether or not the financial statements are correct. And then these other two disclosures about fees are important to investors because they need to know what else the independent auditor is doing for the company besides auditing the financial statements. If the amount of other fees paid was larger than the amount paid for the audit, there would be some concern that the accounting firm would be biased, right? They would perhaps overlook things while doing the audit because the dollar amount of these other fees is very large. So in this case, it's not very large, and Price Waterhouse has been their public accounting firm for several years. So there's a lot of information, right, available in the proxy statement. Most of it deals with information that shareholders would need in order to evaluate how they should vote on questions that were raised. So that's the end of this second lecture. We've covered what the SEC does, the fact that they use a number of forms to conduct their work, and we looked in detail at 4 of those, and I'll put some notes up there as to what's going to be on the quiz, but there will be a quiz on Tuesday or Thursday covering the content of this lecture. Thank you. If you have any questions, feel free to get in touch with me.